Hey guys, Boris Lass from BK Forex. Welcome to our Forex Daily Technicals for 8/16/13. Vol goes crazy, and it certainly does. As always, foreign trading, foreign exchange, or margin carries a high level of risk and is suitable for all investors. I ask you to read this disclaimer very carefully to understand all the risks associated with trading on margin, and to seek advice from an independent financial advisor if you have any doubts. Well, look at this flip and turn that we had in almost all the major pairs, including euro being, of course, one of the biggest um, yo-yo moves we've seen in a very long time. So euro obviously tries to test the 33s, kind of hangs out in the European session at this level, drops like a stone post relatively decent U.S. data, and then bounces off the 32s, and then in a pure liquidity vortex, where basically just absolutely no liquidity, a squeeze on dollar yen to the downside, and just takes out everything in its path in a matter of minutes. We had I think we had almost a 150 point move, literally on no news. It was just been absolute um, volatility squeeze to the upside with very little liquidity in the mix. U.S. yields coming down. I think speculation perhaps that the taper may not happen. It's a lot of uncertainty in the market, and that kind of uncertainty is being very much reflected in the FX world as well. If you look at a longer term chart, I mean, obviously today's daily candle is very bullish. You had sort of a really strong close on the highs, bounce off the lows, and puts the 134s very much squarely in place. We don't have any major economic data tomorrow except for U of M consumer confidence, which may be actually negative and maybe the kind of a thing that could push us through to the 34s. But the 34, from a technical point of view, very important because this 34 is a double top level. We barely tried to test it basically a week and a half ago, failed. If we make the third run through it here and we can bust out, it really opens up the path, certainly to 35s, but really on a longer term basis all the way out to 37s. There's just nothing there blocking it. So this 34 break is a very significant break and definitely worth watching if we can establish that tomorrow on a further power move in the euro dollar. Conversely, dollar yen just flamed out. If you look at dollar yen right now, this is almost a shooting star. I mean, it's certainly a variant of it, and it's a very negative technical construct. It basically shows that we tested the highs and came all the way down to the lows. We're now with 97 in view. Of course, probably at the beginning of Asia is going to be a very tempting test for them just to see if they can press and push it through the 97s. But the real test is going to be the 96s because that's really a double bottom test here, and that certainly seems to be where dollar yen is headed for the near term, especially if U.S. Yields start to compress and if we start to get more risk aversion. Because the irony of the whole thing here is that while the dollar yen trade was based on a virtuous cycle of volatility expansion, greater liquidity out of Japan, blah blah blah, so on and so forth, what's happening now is the exact unwind of all of this, where basically the Abenomics BOJ expansion of liquidity is having zero impact on the market, and the market is really trading much more on risk aversion flows. And with the corporate tax being ruled out, that was the last straw of the dollar yen bulls to try to push this thing higher. And the reversal today certainly looks pretty ugly. We now basically have to rest on the assumption that U.S. economic data just really begins to ramp up. That creates a much more positive structure for bonds in the U.S., for growth in the U.S., and reverses the flows here. But for now, the path of least resistance certainly to the downside. Yen looks like it wants to take 97s, and more importantly, may even put 96s into view on a double bottom test. So certainly worth watching this little development as we come into the end of the week. Cable, helped by the anti-dollar flows, blows through the 56s, so that's a very positive move too. I mean, cable just having a ramp. Very good UK data. There's just lots of fundamental support behind it, and this was just the push needed to kind of squeeze it out a little bit higher. This really is at this point going to become a pure anti-dollar trade. If we can get further dollar weakness into the European session and possibly into the US session, yes, we can potentially have 57 in view. 57, of course, becomes really stiff resistance because this now becomes the real double top test. And I don't think that it's going to be an easy picking for cable. I think come to 57, the balance of risk probably is going to be more to the short side than to the long side. Certainly, if you're a range trader, this is a very interesting potential short area to get into because the risk is defined, because you have clear parameters here, and you definitely have a very serious overhang from this level from beginning of the year. So for cable to really bust through, to press for fresh highs is going to be, I think, a tall order, but definitely worth watching. It's certainly a big power move on cable today. Aussie was a laggard, really hasn't bounced back. Where's my Aussie? Here's my Aussie. Really did not bounce nearly as much as the euro, nor as much as the as cable has, and just been really stymied by this 92 level. We kind of tested it early in session, came back, and now it's created a I forgot the it's a doji, but I forgot the name of it. Special Japanese candle, which is basically a candle of indecision, and it's really very much descriptive. We're sort of a 92, 91 range consolidation indecision here. What's interesting, I think, about the Aussie in many ways is when you have these kind of tight compression ranges, when you break one side or break the other side, it tends to be very indicative of future path. So if we can break to the upside, we definitely have a chance clearly here to make 93s, 94s. To the downside, it's possible retest of 90s and maybe even the 88.50 bottoms. So worth watching. Aussie being weak, of course, opens up the prospect of Aussie crosses here. So worth watching Euro Aussie as it kind of bases out and builds here to the 46s. Could it possibly regenerate and move itself up, certainly to the 47.50s, and possibly even back up to the highs of the 150? That's an interesting trade. And the other trade that I think is really worth bearing, especially if you have, just bear with me. I want to pull up pound Aussie. Here's pound Aussie. The pound Aussie trade is very much worth watching because we are now approaching very close to the yearly swing highs, and if you can barrel through this 73.50 level, it opens up the run towards 75. But again, not quite just there yet. Good power move today, but not a definitive move, not like a 200-300 point move that could push us through these levels. But certainly very much worth watching on the radar as we come into the end of the week. That's how the day shapes up. For a summer doldrum day, it was an unbelievably eventful day in the FX market, driven by nothing but just a wild whipsaw absence of liquidity. And maybe it's setting us up for further price action as we go into the close of the week. Wishing you guys the best of luck, the best of trading. This is Boris Schlossberg.